We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up ASND. We are on the 12-month time frame. Price action, bearish red candle, spiked down to a low, look like to a midpoint of the overall highs and low of the market. Current price is sitting at 86.74. Looking at price action, grabbing the top of the highest high structure, green and red. Headed back to price action, looking for the lowest low structure, red and green. Also adding the midpoint. We're also going to take a zone and place it around that midpoint, a little bit above, a little bit below. Now let's take a look at the market. So as I said before, price action being a bearish red candle, let's see where it's coming from. First candle in the market is a bearish red candle, more like a doji style. Second last candle, bullish green candle, doji style as well. So what happened with the market when it started off, it basically consolidated sideways. So you can think about it, if it pushes, okay, push up from a pattern, broke the overall midpoint structure, came back to return. So that's identified as the market pushed up, came back to retest, and now we're going to look to see if the market's going to break out, consolidate, or push down further. With the prices second to last candle in the market, we did receive two spikes down to that low, into that zone area, towards that bottom of that zone. So it's identifying as lost momentum. So we're going to see if the following candle can push down with the bearish red candle to push through. If not, as I said before, it can consolidate. If the market pushes down from this area, where is it coming from? Headed back to price action, look at the high, what happened up there. With the green and red candle is identifying the double top. So market spiked up once, spiked up twice, came down. So we have a double top in that area. The second last candle is a retest towards the third to fourth last candle in the market. So we have a double top and a retest. Well, I should say double top and double retest, and the market pushed down. And now if it breaks, we're looking for the break. We're looking for the retest for that market to push down further. So if price action pushes up, it can tag the SR lines of 92.40. If it pushes up further than that, it can head to the midpoint. That would be second level highs, nearing the numbers of 131.59. If price action pushes down, it can head towards second level lows, so near the numbers of 49.60. Walking down to the 6-month time frame to see what's going on. So price action on the 6-month time frame, reading as a bearish red candle, spike down to the low of that bottom of that zone, same as the second last candle. And price second, third last candle is all side by side. So that's identifying a pattern being formed. So let's talk about it. So once again, when that market did push up from that pattern at that low, it broke, came back to return in this area here. What did we receive? And that's between the second and third last candle. We did receive the coming down in red as the first leg, second leg, third leg. Now if it follows up the bullish candle, we'll see that double bottom. If not, it'll just identify as market coming from that multiple pushes to the top. So we have first, second, third, fourth. So it's a double top, retest, and we'll see if it's going to push down for that solid one push. So markets are coming from a double top and a retest and have that push that's going to break through the zone. If not, it'll consolidate. Working our way to the 3-month time frame. So price action on the 3-month time frame, which reading as a bullish green candle. The primary candle has to break out is the fifth to last candle in the market towards that top side or that bottom side. So we're looking for a pattern to form in that area. But let's say if price action is respected at the bottom of that zone, it does work its way up. What pattern is coming from? It's coming from the second, third, fourth, fifth fifth to last candle of the market, which could identify a pattern. So when that market identified the break, the retest and return, that'll be the first leg, second leg, third leg, and it push up with the bullish green candles and push up out of here and create that double bottom pattern. But overall, that market is in a consolidation within the zone, a little bit above the zone, a little bit below the zone, all consolidation, waiting for the pattern to form to push that market out of that structure. Walking down to the monthly time frame, so price action on the monthly time frame is reading as a bullish green candle. So there's a few things that happen over here. Second last candle is a spike up to the high. So what's happening with that second last candle also is a huge gap in the market. So if we had to fill in the patterns that were formed, if that, as I said before, if price action pushes out the zone, because you can see it's coming back into the zone, see if it pushes out, then it'll identify as a first, second, third, and then market will work its way to the price of 92.40. Then it'll head to the top of that zone, which will be near the numbers of 106.97 before we see the break, the retest, and for that market to head up to the following level, nearing the numbers of 133.39. Walking down to the weekly time frame, so price action on the weekly time frame is reading as a bullish green candle, engulfing the second last candle. So as you can see, that's headed up to 92.40. Then we're looking for the break if you're going to trade inside the zone, break and retest, or the break test on top of the zone. But we can see that structure forming for that first, second, third, and we have the fourth. Second last candle is support as the third, fourth, the fifth to last candle. So second and fifth to last candle in the market is creating that support for that market. See if it's going to push up. And if it's denied, it can be denied at the midpoint and it'll drop down. We'll see if we can talk about that on the daily time frame. So price action bullish green candle on the daily time frame, still engulfing all the previous sides. So we can see the engulfment and we can see that pattern that's forming. So it did break. Okay, so the way we break this level down is we can see the area that it broke. So drawing it out first, second, third, got the break of the double bottom. So I mean, we're looking for a retest. It could push up further and finally get the retest at the midpoint of the zone, or we get the retest at this level here. What that level would identify is, so let's take, if we take in a zone, the high, then we'll have second level highs of that zone, the midpoint, and it would create second level lows of that zone, and we have the lowest low structure, which would be the bottom of that zone. So we can see that price action did break second level highs. So we're looking to see if the market's going to identify a break, which it did, the retest to push up further, or it's going to follow with bullish green candles, unless it's denied at the overall structure of the midpoint. So it could be touching that area and working its way down. And if so, then it will be identified as a pattern coming from a break, a retest, or I should say break and multiple retests. So I mean, the market broke the midpoint, retest once, retest twice, and it can work its way down, and you can see that double top that it can be coming from if it drops down here or at the midpoint. Headed to the daily time frame, still on it, going towards the second to last candle of the market, grabbing that high. Also grabbing that low of the second last candle of the market, which is towards the bottom. So as we walk down the time frame, we can see what happened. So as of 9:30 a.m., 5/1/23, the market broke out, and let's see what we received. We received a bullish green candle. So basically, this is consolidation at this area. So we see this market is going to this identifying a break, the retest is going to push up, or we see that consolidation unless it come back for a full retest the SR line before working its way up further, unless it drops down further, and I'll be back into the overall area where it came from. Walking down to the 3, walking down to the 2. So still price second side by side. So we look for the third last candle on a 2-hour time frame. Walking down to the 1, same as well. So it's some type of pattern being formed. So if it pushes down from this area, that means if it has a hard time breaking, with the last 4 candles identify as first, second, third, fourth, retest, market drops down with the bearish red candle coming from a double top and retest or triple top, unless we see those levels that keep working the market up. Okay, guys, this is Cam Jones, FX, ASND, Stock.